All right, we are live, Money Mondays.
We're live. All right. Well, thanks
Disrupt TV
back.
Studios on August 31st, which happens to be whose birthday?
Oh, it's
Whose
mine.
birthday?
Wait. Where's my hat at, man? Where's my?
You don't get a hat, all right?
I don't
We're
get a hat?
celebrating your birthday, but
Aw.
yeah. So
All right, next time.
because
next
it's
time.
Ben's birthday, he decided to not do any work today as usual. So I'm, kind of carrying the full load of the
I'm being
business, and
even
so
lazier today than I normally am. Sorry. I'm working 10 hours instead of 12.
That's absolutely true.
So
for those of you tuning in, Money Mondays, we do this every Monday, 3:30 Central.
Yep.
And, variety of different topics. Today's topic is going to be...
Stocks versus real estate.
Absolutely. And
Yeah.
so, we'll go through a short presentation, but at the end, we'll do an open Q&A. And so for anyone that is watching this, feel free to leave questions. Doesn't have to be about our topic.
Yep.
But we hope this topic has got a lot of, a lot of the things people wonder.
No, I think that it is, right? When you get into investing, right, you go one track or the other for the most part. Or sometimes, once you're a little bit more sophisticated, you have a little bit of a diversified portfolio of things. But before we get into this, we have a very special guest,
right?
So for my birthday,
You got
I wanted to
Grant
introduce...
Cardone? Oh, wait.
Not Grant
Next
Cardone.
even better.
The next Elena Cardone, right? Coming up here, Miss Lillian Suttles. You want to come up here real quick, honey? Come around this way. All right. So this is my daughter, everybody. Say hi.
Hi. You are live at Disrupt TV Studios.
You want to talk about stocks and real estate with us? No, not so much.
Because Ben has decided not to work today, he figured he would bring someone else to help carry the load. And so, Lillian's already doing more than Ben typically does on a Monday, so we're ready to rock and roll there.
Hey,
So.
whoa. So you want to say hi to everybody?
Hi.
Hi, yeah, we got all the cameras, all the lights and everything. Yeah. We'll have to come up here. We'll have to get your own investing show here soon enough, right? Yeah.
Yeah,
Okay.
We'll definitely launch more of these shows here soon. So we'll see what
That's
else
what we're
comes
gonna
up.
try. We're gonna try. All right,
So
man.
Lillian, what are your thoughts? Real estate or stocks? Which one do you prefer? Which one of those do you like better?
estate.
Real estate?
All right.
That's the right answer. All right. Good job, Lillian. Thank you to our special guest.
All right, boo-boo. All right, give me a second. All right, say thank you. Bye.
So, look at Ben smile. Look at that. Only I can make him smile almost that much besides Lillian. So, I hear Shanna, our producer's over there giggling, so she's having a good time out there. So, real estate versus stock market. Let's hop right in, right? So, before we get going, right, I guess maybe, I'll speak personally as well, right? For me, my background was, came from the tech world, had done stocks, right? That's the thing everyone talks about. And I was looking for a better way to deploy my money. And so that's kind of what got me into real estate and on that path. And, I've kind of seen both worlds, and I still have a little bit of a, stock portfolio, right?
As everybody should, right?
I like to diversify, but obviously I'm real estate heavy. That's kind of how I like to put it. And so,
No, I think once you get in, mainstream media, whatever you want to call it, right? Like it's all about stocks, right? Real estate is something that you really have to explore on your own, and it's a little bit more of a sophisticated investment. You have to really do some research and have some knowledge, right?
And it's because, it's so easy to do stocks. It absolutely is. It's easier. But with technology, it's gotten even easier, right? Most people get into stocks really because of their 401k and their IRAs, right?
Yes.
But as we know, you can do what to help invest in real estate with your 401k and
Well, you can roll that
IRAs.
into a self-directed IRA.
Absolutely. So if you're looking for vendors, Quest IRA as well as Advant IRA, both of them, have self-directed IRA programs to help with investing in real estate, and it can be almost as easy as real estate, stocks, right? Not the same, but it is. It's gotten significantly easier than I think most people realize.
So we're real estate guys. So let's take it like this. Let's say, what's the pros of, you go with the pros, and I'll go with the cons, right, of both stocks and real estate. And ultimately, folks, there's not a right or wrong answer, right? We have a ton of folks that do stock trading. They're day traders. They make a ton of money. Right, and then we know obviously some very successful real estate investors too. So don't look at this as like there's a right or wrong answer here. Ultimately, you have to determine that on your own, right? What is your risk profile? What are you trying to do, with your investment, right?
Absolutely.
So, just take this with a grain of salt. So pros of stocks.
Pros of stocks. It's easy.
Yep.
It's
So it's
liquid. Yeah, it's just easy to sell, easy to buy. Right. And you can get better returns, but also you could not get better returns, right? So, if you kind of take the past year out of the equation, it's kind of been a weird year. But in general, right, the stock market, the past 60 years has been averaging what? 9, 10%, 11%.
Oh, I thought it was 6 to 8.
I think it's 9 to 10, all
Okay.
in,
It might-
annually, right? So, that's what people have been getting, and it's not a bad return, right?
Yep.
But now the problem with it is that you're kind of beholden to random entities, random companies, and their CEOs, and you don't know what they may do. Right, so I guess maybe I'll leave the bad for you, So you tricked me. You made the harder one for me. So let's see other pros of stocks. I mean, liquid. You can get capital gains, which if you know how to use them, that could be to an advantage, right? Mm-hmm. It's easy to go have a stock that you actually sell at a loss because you need those losses,
yes.
right? It's people, you can get creative with that. I mean, you can make a lot of money with stocks, but again, it's to me. Yeah, I mean, I guess it's just a lack of certainty. That's maybe my bigger thing.
Yeah, I mean, who. I'll take Enron. We're from Houston, right? Enron was a personal thing. We knew people that got hit during that whole crisis, right? How can you control that the CEO and the upper echelon are committing fraud, right? So they went from top 10 biggest company in the country to essentially nothing within a matter of a few weeks, right? And a lot of their employees had a lot of their life savings tied up in Enron stock. Yeah. So I think that's. With any investment, right, you have to do your due diligence, right?
And if anyone wants to learn more about that, there's a good movie, the Smartest Guy in the Room, I think is what it's called.
I think that's a book too, right?
Probably a book too. They're not talking about Ben, all right? We're talking about the book. And so, it's his birthday. I got to be nice to the guy, right? And I didn't make any bald jokes yet. So. But before we continue, for those of you tuning in, Money Mondays, right? We do this every Monday, 3:30 Central, talk about different topics. This week we're talking about stock market versus real estate. We will do Q&A at the end, open Q&A. You can ask anything you want to ask, and we will answer them live. It doesn't have to be about our topic.
So I'm going to get into the
really
cons.
quickly, but we go through the comments, right? So Rami says, good to see you. Good to see you too. Ronnie says, happy birthday.
Thanks, buddy.
Ronnie says, happy birthday.
All right. Thank you.
No one cares about me. Ronnie says, hi, Lillian. That's for you, Lillian.
Hey.
Continuing on. Rami says he's sure Lillian will be better than Ben. True
probably.
fact.
That's probably true.
John Montero made a good comment. We are off center on our set. I guess you're right. We are a little off center. So we'll fix that one. I blame that.
See, I'm centered to this. This guy
but he's saying
is
the
off.
whole set. Look at it. Like the gap on one side of the screens is more than the gap on the other side, right? We're a little skewed, and so.
That's because you're just not close to me, dude.
John's an attention to detail guy. That's why we like
the
guy.
Me,
We're going to do a deal with a guy, and he's going to help make sure all the details are figured out.
No, that's true. That's true.
And Laura says happy birthday.
All right.
And
thank
Ronnie
you.
says thoughts on converting the portfolio into a REIT after hitting 1 billion assets under management.
All right, we're getting to REITs. We're getting to REITs.
We'll get to the REITs. We'll talk through that.
So I'm going to talk about cons of stocks, right? You talked about pros. Let's talk about cons, right? So I think the con, I would say one of the biggest ones is that you can't control the management, right? You can't control that there'll be some sort of scandal and that the next day, your high flying stock goes to next to nothing.
Yeah.
Right. So, I mean, once again, with any investment, you can lose your 100% of your investment, but that seems to be a bigger thing these days with fraud and just all the stuff that's kind of going on.
On that same vein, too, right? You have the risk of tariffs and other geopolitical things that happen that can impact that business, right?
Yep. Yeah.
And so you have that with real estate, but a very different kind of extent.
Yeah, especially when you have these Fortune 500 companies, right? But the one thing that I don't like about stocks too is, and this is different than what we do, is if you have a problem with the management and their decisions and the way that they're performing, you can't just call up the CEO of Apple, and be like, hey, buddy. I forgot what his name is. I should know this. I am even invested in Apple, that's what his name is.
Come on, man.
Tim, get your act together. Why was last quarter, not what it was supposed to be projected, right? Now, Apple's probably a bad example. They've been doing pretty good, but you get my point, folks, right? You're not going to be able to get the management team on the phone and ask, what's going on? What are we going to do to make it better, right? And I think that that's a big thing too. Absolutely. And your stock trader, if you have one, right? And most days there's not a whole lot of those guys anymore, but even before you're like, hey, what's going on? They don't care one way or the other, right? They're making a fee off of every stock that you trade. So that's some of the cons that I see as far as stocks. You see
I'd say
more?
another, big one relative to real estate is just the fact that you can't get the losses like you can in real estate, right?
That's true.
You don't get paper losses in stocks. Yes, you can get it. You can kind of get a loss, right, where you do a sell that, you you can buy both sides of the
There's
stock.
no depreciation.
You can get a loss, but you have that gain that offset somewhere too. So it's a lot harder. Whereas real estate, you get real depreciation, and you can do 1031 exchanges. You can't do that in stocks, and so you can never pay taxes on that if you're smart about it. You know what you're doing. So
no, depreciation's huge, right?
That's another one that to me. And so again, diversify it, be smart, don't go all in on one or the other. But at least for me, right, with the pros and cons, to me, just real estate made a lot more sense.
Yep. So let's talk about. We'll go with the pros. You go with the pros on real estate, and then I'll go with the cons again.
Pros on real estate, man. It's real. It's something that is tangible, right? There's clear ownership. It's always going to have some value, right? Whereas a stock can go to zero, right?
Yeah,
I mean, it absolutely can. Now, with real estate, it'll never go to zero, right? It might not be worth as much, but it's even land off in the middle of nowhere still worth something, right?
No, I remember one of our more sophisticated investors was trying to get the land cost. We were buying an apartment complex, right? He started backing in. Well, how much if this thing burnt to the ground, how much essentially are you paying for the land, right? Yeah. And in this case, obviously it was like 10 or 12 acre property, right? And so he was looking at it almost a total loss, like a hurricane or a tornado blew through and blew all the buildings down, and we never replaced them. Yeah. At least the land is worth something.
Absolutely.
Right?
So to me, kind of on that same note, right? It's really to me the pillars of real estate, right? It's that real estate over time appreciates as well as rents, and so the money you put in becomes you're generating more on that over time. Yep. You can leverage it, right? That's a huge one. People, there's smart debt. You can leverage your money. So now your, $1 million can actually go buy you $5 million of real estate, right? And so it's another big one because again, you're really making your money go further. Yeah. And so it's appreciation, leverage, depreciation. We talked about that one, right? You can, there are people that will invest, and I literally had one. I have a call with them later this week, where people that are looking to invest only for doing the accelerated depreciation because they're looking for a lot of losses. They made too much money that year, and they're looking to, get a reduction in their tax burden. Yeah. And so, what else am I missing? Appreciate cash flow, right? That's the other big one. Yeah. I mean, we are investing for cash flow stocks. You can get dividend stocks, but it's not.
It's kind of crappy.
Not as common.
I mean, it's not, and ultimately, it's once again, you could have a company say we're going to stop that. But hey, my daughter's playing with one of my balloons.
All right, playing with the balloons, man. Yeah.
No, but so that's some of the pros of real estate, right? So let's talk about cons. We talked about the liquidity of stocks earlier, right? I'd say the dual side of that is the illiquidity of some of these real estate investments. Not all of them, right?
Absolutely.
But let's talk about multifamily syndication because that's kind of the space that we're in currently, right? You are investing, you're buying shares in an LLC that is then therefore buying real estate, right? It's not a liquid investment. Yes, could you potentially get your money out? Absolutely. And we always have mechanisms to do that, but it's not like a stock where you can kind of get into your TD Ameritrade account, and say, sell and it sells. So there's always going to be a buyer.
There's some time process. It's not stocks I could sell them today,
Yeah, there's always a buyer, right? It's a very liquid market, right? Whereas with real estate, yes, could we sell the property? Absolutely, but that's not an overnight process.
You can sell the property and people could sell the shares. You can do both, but there's time that's involved. And
absolutely.
And for some of our investors, they're going to find out about a potential sale we have coming up too. So another
deal
we're looking at selling one of our assets.
So one thing that we have up on the screen too is barriers to entry, right? I think the other thing about stocks, why people gravitate to those when they're starting out, is that it's easy, right? You have $20 and you can go buy a share of something, or maybe even multiple shares of something, right? Whereas with real estate, you're probably going to need thousands of dollars, right? Now, depending on what you're buying, whether it's multifamily or single family, but bottom line, you're going to need more than $20. So I think that there's also a lower barrier of entry for stocks versus real estate, right? So let's talk about.
Well, before we continue, right? Let me kind of maybe go through some more of the comments, right? So there's a lot more happy birthdays. So sorry, I'll just kind of skip those. Ronnie keeps. I shall say the people. David, our buddy David says happy birthday. Who else? Jefferson says happy birthday. Isaac says happy birthday.
Thanks, guys.
Laura asked if you missed Lillian's appearance. Yes, she did, but Lillian is still here. We didn't send her home by herself yet. Continuing on, so Ronnie asked, do you invest in stocks or only in commercial real estate and businesses? Me, I'm diversified. Right? Yeah, I do have a stock portfolio.
I do too.
But I'm very heavy on the real estate side. Personally, Ronnie said, heard it's a good time to short the market here soon. Thoughts? Nobody has a crystal ball,
yeah,
right? I mean, it's been a really weird stock market. I'm not going to lie.
I think it's an unnatural stock.
I've actually been selling some of the stocks that I've had for I've had Tesla forever, but now Tesla's gotten really weird.
Yeah,
right.
I think some of this stuff.
Some of this stuff. So I've learned over my career in stock investing to take money off the table. So I think that's an important thing.
Yeah, just whenever you get that gut feeling, folks, that things are frothy. Right, just be careful. Right, take some money off the table, like Ferris says. Sell a little bit.
Don't be susceptible for the greater full theory. Definitely look that up if you don't know what that is. Continuing on, so John Montero says stocks don't offer the tax benefits that real estate does. Absolutely, that's a huge difference. Yeah. Difficult to leverage stocks like you can with low fixed rate debt. Actually, I mentioned leverage, but maybe to even go further, Sean has a good point. Right, with multifamily specifically, you have some of the best debt in the world, right? 30-year amortizations, 5, 10-year notes, sometimes longer. 5, 10-year amortization. Sorry, interest only. I meant to say. So I mean, some of these deals are interest only for the full term. That helps juice your cash flow, right? And it's nice, super low interest rate. I mean, really, the only interest rate that's lower if you're doing a specific subset of multifamily HUD. But other than that, multifamily is pretty much some of the best debt in the world, and being able to lock in nice long-term debt while money's really cheap right now, that's very powerful. Yeah,
that's huge, right? You can leverage other people's money to go out and buy real estate, right? And you could do that to a lesser extent on stocks, right? I think it's buying on margin, or I forgot exactly what the term is. John might know, right?
You can buy margin.
But
I mean, buying on margin is not leveraging. That's a margin is a very short-term thing, and you do not want
if you get caught on the other side of that trade, right, you could lose your whole entire fortune, right? So you just have to be very careful. But a lot of people do that, right, where you can buy 10 to 1, right, something like that. But bottom line, that's a more sophisticated play, right? Our day-to-day investors like ourselves, right? You can more easily use leverage on the real estate side.
Yeah, and continuing down, real estate has better cash flow returns than even high dividend stocks. Yeah, absolutely. Even the best dividend stocks still don't get the cash flow that real estate gets.
And just so you guys know, right, once again, we're not experts on stocks, right? We're just trying to point out some of the more obvious, pros and cons and differences between the two, right? There's probably some of our followers that are a lot more savvy about this stuff.
Rami asked, have invested in real estate. What is the best? Should I open an LLC or keep my investment under my name? I'm going to point Rami to, if you go to the Multifamily Masters Live group, go look at the last Multifamily Masters Live that we did. We had attorneys that went and talked about asset protection, and they kind of talked a little bit about that.
You said he was pretty sharp.
That. Yeah, sharp guys. Definitely highly recommend people check that out if you want to learn about asset protection. Yeah. And they talk about pros and cons of kind of some of the different structures. And so we're not the right people to probably answer that question.
Yeah, that's a very personalized question. It's like, what should I do on my taxes, right? I mean, it's all kind of very personally driven. So just, check with your professional on that one.
Absolutely. Right? So continuing on, let's keep going on our presentation.
So REITs. So let's talk about what is a REIT, right?
Real estate investment trust. Next question.
All right. So what's
long story short, REIT is a business that is buying real estate. That's fundamentally what a REIT is. So I have friends that, hey, I'm investing in real estate because I'm buying REITs.
Yep.
While yes, you are kind of. Right, you are investing in a business that invests in businesses, but a REIT is really a stock. You're still owns to a specific person. That it's a business that can not perform. It can go under, right? Mm-hmm. But it's also you're not getting all of the benefits of real estate, right? With a REIT, you're investing, with the cash flow kind of model. You're not getting the pillars, right? The losses, even, they are leveraging their money, right? Which is kind of your money, but again, you're not getting that juicing.
It doesn't flow down, right? With the syndication, one thing that we should point out for folks that, don't know what our model is, right? You're investing in the partnership. As a K1 and partner of the deal, right, you're going to get the passive income first and foremost, but also those losses, right? The depreciation is going to flow down to you personally. Whereas in a REIT, you're not going to get any of that, right? It's bought and sold like a stock, even though the principal, business of that organization is to own real estate. But it's funny because you'll get a lot of people that we'll talk to that are a little bit they're unsure of real estate and how it works. And they feel like, oh, well, if I'm invested in a REIT, then I'm invested in real estate, right? But no, not so much, right? It's more of a stock in my book than it is a real estate.
Oh, absolutely.
But to Ronnie's question, right? And I know why you're asking this because we have a mutual friend that's kind of rolling up his portfolio to create a REIT, right? Obviously, for the person that's doing that, that's very lucrative. Right, but there's a lot of compliance, and obviously, they're going to go through and audit the heck out of the whole entire portfolio before you can turn that in, and there's a whole process to doing that, right? So once we have 10, 20,000 units, we can maybe talk about it.
Yeah.
We're a little ways off.
Yeah, so I mean, so fundamentally, a REIT is while it is technically real estate, it's still very different. And my bigger problem with REITs is that it's still very susceptible to the market, right? Pricing and fluctuations. Whereas with real estate, I mean, sometimes, you're just holding on in cash flow and you could care less about what the market is doing.
One good point about that, right? It is susceptible to markets. What I don't like about it, right, is, all REITs, regardless if their specialization is in this, this, and this, can get caught up in if there's a real estate slowdown, right? So regardless if your real estate REIT is tied to multifamily, right, it could get caught up in the overall fact that the real estate market is depressed at some certain point. And this kind of happened back 8, 9, 10, right? And so you have to kind of look at it like they all get lumped together as just real estate, right? Regardless of what their specialization is. Whereas if you're invested in multifamily is doing good, regardless if single family and everything else is doing bad, they're still going to reap those benefits.
Yeah,
right?
absolutely. And again, even when the market takes a dip, yes, rents can fall, yes, collection can drop, but those are small impacts, right? It's not like your income is going to drop 50%.
Correct.
I mean, it's your total collections doesn't drop 50%. Now you still have debt service, right? Your cash flow is a small portion of that.
Yep.
But I mean, it's a lot more resilient to huge fluctuations, right? In terms of if you're just holding on for cash flow. And that's why you have these companies that will do 15-year debt, or heck, I mean, let's talk about a HUD, 40-year debt, 40-year, and just ride these things out in cash flow for life, right?
Yeah.
So that's that. Maybe going through. So for those of you tuning in, Mondays, we do this every Monday, 3:30 Central. For now, maybe we'll move it at some point because Mondays are always busy. But today wasn't so bad. It is Ben's birthday, and we basically go through different topics. This week we're talking about real estate versus stocks and kind of pros and cons. Who knows what we're going to talk about next week? Shannon, our producer, probably knows. I don't know. And we will do a Q&A at the end of this. And so people are welcome to ask questions. It doesn't have to be about our topic. And kind of going through a few of the comments. All right. Chris Collins. Hey, Chris. Long time no see.
What's up, buddy?
Chris needs to come out to Houston and visit us.
Get some tacos, man. Yeah. Come on
We'll get you
out.
some tacos, actually. Houston's, you're
got
like
some good
a mecca.
Mexican food.
No, we have a lot of good taco places. But he says syndications plus stocks can be a great marriage because passive losses on syndications will offset your tax implications on some stock gains. Absolutely.
I like it.
Right.
That's the way to marry the two, right?
Yeah. If you have to know how to do it. It's not the same for everybody or in certain situations, but absolutely. It can be very powerful. And for some people, there are some people that just made a ton of money, whether it's stocks or other situations or selling their business, where they are looking for ways to offset it.
Yeah, they're looking for losses, right? So in that case, right, you come onto a syndication that's going to be doing a cost segregation, bonus depreciation, all that good stuff, right? And you'll see those losses.
So continuing on really quick, Chris says, jumped in late, but isn't it Ben's birthday? Yes, it is.
It is.
Brandon Gordon says, happy birthday.
Thank you.
Ronnie says, how does it feel to be 28, Ben? That's a good question.
28,
how does it feel to be 28?
All right. I don't know, man.
Yeah, it's amazing, guys. He lost his hair at 22. And so,
No, I really did, but it's.
Oh, you did.
I wish
Okay.
it was 28. It's a little bit later than that, right?
Let's see. Chris says, "Don't threaten me with a good time tacos." No, really, Chris, come on down and
No, you're welcome, dude.
We'll take you to 5 different taco places. Like, trust me, I've tried.
We've got
a few
some
of them.
deals in San Antonio. It's 2.5 hours away from San Antonio, so it's not too far.
Let's keep going then.
What's the next slide on this one? So I think we had a couple.
slide.
We had a couple questions that kind of came in before this.
Yeah. So Q&A: which investment vehicle would be more time-consuming? Real estate is more time-consuming, right? Stocks is a click of a button. That's really what it boils down to. But for a passive investor, real estate is really filling up paperwork and wiring some money, so it's really minimal. Now, if you're looking for an active role in real estate, that's a job, right?
But you can also be a day trader too. Yeah. That's a job as well, right? I think both sides, most of people that have stocks, are not day traders, right? They're buying some, blue chip, or technology stocks, and they just buy it and they forget it, right? Yeah. Or you shouldn't look at it every single day, or you're going to just get nervous about the whole thing.
What are average returns for multifamily real estate syndications?
Okay.
Right. Most deals we're looking for 7 to 12% average cash on cash. That is yearly money paid out.
Yep.
And you really, over the course of the deal, you're looking to double people's money in 5 to 8 years, depending on the age, the play, all of that. That's maybe the really big rules of thumb. Mm-hmm. And so, you get cash flow plus on the exit, you're making a pop typically, right?
Yeah, and you might have a refi in there or a supplemental loan, right? It just depends. But over the course of it, right, we always try to get a 2x multiple, regardless if that's in 3 years or 8 years, right? And that's always disclosed up front.
Yeah, and let's see. So going through a few of the questions on here. So that's all the ones that came in before. So going through some of the other questions. Speaking of depreciation write-offs, this is from Chris Collins. Is there any time you don't do a cost segregation study? There are times you should not do a cost segregation study if it's going to be a short hold. We have a deal that literally probably will execute a PSA on this week that we probably shouldn't have done the cost segregation study, right? Because then, people used it and now they have to kind of figure there's some reasons to not do a cost segregation study, but ultimately really typically boils down to short term.
We're also going to make a very, very good
return.
We're
going to make them a ton of money, so it still makes sense. On that deal, it's a home run.
If it's tight on the back end, right, then you're like, okay, really wasn't worth it. So I think ultimately they're going to be made very, very whole on that one.
And so, but I think typically it's if you're doing, I think the rule of thumb is like 3 years, right? If you're doing less than 3 years, cost segregation study.
Yeah, you're going to have to pay the tax person. What you're doing is you're essentially just deferring, your tax liability to a future date, right? So, if it's going to be in 1 year, then maybe just hold off on that. But if you're going to hold on to it for 5 to 7 years, yeah, you should absolutely do one, right? And we always do it usually first year, right? Before we kind of get too heavy into our CapEx and our rehab updates, right?
Absolutely. So if anyone has any more questions, please go ahead and leave them. Money Mondays, we do this every Monday, 3:30 Central for right about 30 minutes. So we'll wrap up here in the next few minutes, going through different topics. This week we're talking about real estate versus stock market.
Yep.
Next week we are talking about single family versus multifamily real estate investing. That's what it is.
Something that this guy knows a lot about, right?
I do kind of. So I was actually talking to someone earlier today about it. So
yeah.
And with that said as well, let's see. So. We do also have our basically syndication versus REITs Investor Academy lesson, right? So for those of you who don't know, we launched Investor Academy recently. So go check out disruptequity.com/syndication vs REITs versus REITs. Right, to kind of help simplify that, to kind of check that lesson
That's up
out.
on the screen, so yeah, take a
kind of, we do a deep dive on kind of syndication and REITs and the pros and cons of those.
And the other thing too, we're getting a really, really good guy to come on to kind of do stocks as well, right?
Yeah,
so Investor Academy folks, I want you to know that's not just multifamily, that's not just real estate. We're going to any kind of investment. We're going to get the educators out there, the rock stars, the people that are doing deals, and they're going to explain these concepts to folks, right? So, we're spinning up some more educational videos for the stock investing, and we got a really great guy. He knows a lot about this stuff. So be on the lookout for that in the next month or so.
Absolutely.
So that should be fun.
All right. So if anyone has any more questions, please go ahead and drop them in, and we will talk through them. Otherwise, we're going to wrap up here in the next minute.
Come say bye.
Let's bring our key guest here, since her mom totally missed her this time around.
All right.
There you go, Laura.
There you go. Say hi to mommy. Hi. Say hi. All right. Did you have fun? Yeah, this is bright lights, huh?
See, Daddy does do some work, right?
All right, man.
All right, we got one question came in right before we wrapped up. So Chris says, non-stock related. You're offering on more deals than I am. What are you seeing out there? Anything coming close? Have you seen any benefits of COVID yet, or is that still way out? Haven't seen benefits to COVID yet. I mean, but there, in terms of deals, it's been interesting. So obviously we're in multiple markets. The Texas market kind of blew up the past 2 weeks. So just tons of deal flow.
Oh my gosh, we've
Lots
probably
of
seen
stuff,
like
on market, off
60
market,
deals.
everything in between. Everyone is trying to sell. And so I think that's going to be some opportunity. That's how 2 years ago we picked up several properties because there was just too much supply. The demand didn't change.
Yep.
We think kind of Atlanta's been a lot more quiet, right? It hasn't been as much deal flow. Mm-hmm. And so TBD on what happens there. But yeah, I mean, we're making a lot of offers. We've been close on a few out of bet good money that we would have one under contract. I'm glad I didn't bet any money. Yeah. But, we're close on a few more. And ultimately, it's about finding deals that make sense, right?
And I think, another thing, we're changing our strategy a little bit, right? We're trying to do, some newer type deals, more class B, A- stuff that we can still do a little bit of, interior value add to. But I think that's kind of what we're trying to do as we transition and mature in our business.
The other, I guess, to Ben's point, we think the C-class value add. It's hard to find real deals.
It's
there.
tough.
It's overdone. So we've been looking at a lot more nicer assets where the price points make a lot more sense, and the returns aren't as high, but they're a lot lower risk, much better deal locations. So. That's
and a lot newer locations.
Yeah.
30 years newer.
So that's kind of what we've been focusing more on. Ronnie asks, why isn't Ben wearing the birthday hat? We can fix that here on the show. There you guys go.
All right. You like
I guess
it?
with that said, if anyone has any more comments, questions, ask them. Otherwise, we can call this a wrap.
All right.
Going once, twice.
Look a lot prettier.
All right. Well, thank you all, and look forward to kind of seeing you guys again on the next week.
All right. Bye, everybody.